Hey folks, welcome back to the channel. Let's talk about the S&P 500 because it has just hit a new high this past week. The SPY went up to 610 before falling a bit on Friday. So where is the market headed now? Well, medium and long term, it's probably still going higher, but there's a few signals that in the shorter term might be concerning. So going into February, I think we're going to have some kind of pullback. The first reason is because the market tends to be weak after an election year. So this chart shows what happens to the S&P 500 in the year after an election, which is now, and in all post-election years, we have this black line, and so far it looks like we are following it. In January, it was pretty flat at first, and then it went higher. January started here, it went up first and then down, came back up, and now it's ending the month higher. But once it gets into February, you can see there is this pullback and the stock market return actually goes negative on average. More specifically, if we take a look at the red line, which is when the incumbent party loses, that's what happened this time, there's an even bigger drop. Now, it's not by much. From the beginning of the year to the end of February, it looks like it's down about 3%. But also keep in mind, this is an aggregate of historical data going back to 1949. So sometimes it could be down 6%, sometimes it could be up 4%. However, typically it does seem like there's going to be some kind of weakness coming up in February, going into early March. However, if you look at the rest of the year, it seems to be pretty good for the market as late February, early March seems to be the lowest. Now, the second reason I think there might be a correction is because recently company insiders are selling their shares at a rate not seen in over 30 years. Right now, there are a lot more companies with insiders selling than with insiders buying, putting the buy-sell ratio at 0.22, which is on track to be the lowest number since 1988. Now, insiders are usually early when it comes to the market selling off, but it is a sign that the market has at least reached a temporary high for now, because last year in the summer, we had the same headline. Insiders were selling their stocks at a really fast rate. This news was posted at the end of July last year. And if we take a look at the SPY on July of last year, we can see that indeed the market did top just before that, and there was a sell-off going into August with the total decline being about 10%, which marked that correction. But like I mentioned earlier, this was short-lived, and after that the market continued going higher by about 19%. So because insider selling does have a track record of providing an early warning sign of a pullback, I think we are probably going to see that soon. And then the final reason is just from a technical standpoint, we had this bear channel throughout last month, which the market broke out of earlier this year. Usually when you have a break of the channel, the market likes to double that range. So if I were to double the width of this channel, you can see that we are pretty much near the top right now. So very often what would happen is we get a bounce from this blue line and the price will try to get pushed down to fill these gaps because it has to decide whether the people who bought in here are willing to hold on to their shares or if they're going to sell. But the biggest thing to watch really is just the price action with the main support and resistance around this 608 level. The RSI has already started to turn downwards, although it is still above 50, but the MACD is still very much in positive territory. But things can move pretty fast. If I drop down to the hourly chart, here we can see the RSI is already below 50, so that's a bearish signal. Meanwhile, the MACD is heading downwards, and if the blue MACD line crosses below the 0 level right here, then that would be negative, because the last time it did that, which was back here, this one doesn't really count because it bounced off after a couple of hours. But this one over here was when the MACD crossed from positive to negative. That was on January the 7th. And you can see on January 7th, that corresponded with 1, 2, 3, about 4 days of selling before bottoming and finally going up on the 4th day. So that's why I think this February is a good time to be cautious. And I'm certainly going to be taking some profits with some of my stocks, especially if the market does bounce off this upper line in the bear channel. And I will use these two purple levels as my gauge, 609 being a support level. If next week the market goes higher and we get some type of bounce, then I will continue to remain bullish. But if it falls below the 602 level and heads lower, then that's probably going to be a short-term bear trend. Anything in between these two levels, I'm not really sure which way the market is going to go because there was a lot of consolidation back there. And right now we're kind of in that zone again. So until it breaks out, it's hard to say which direction is going to be the next move. But because of the data I've showed in this video, I think it's likely we're going to see some kind of correction in the weeks to come. Anyway, thanks a lot for watching. Good luck with your investments, and I'll talk to you in the next one.